All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Pretty bearish open here out there in the market this morning in terms of the dynamics and what's going on. It is one where overnight there were more issues created or more uncertainty created with the Turkish situation. And basically what happened is the Turkish lira, or the cost to borrow Turkish lira, pretty much doubled. And, that's a big move. And you say, well, the cost to borrow a currency, what difference does that make? Well, it makes a lot of difference with what are called carry trades. And carry trades are trades where one currency is bought or one currency is borrowed, and they use the funds from that to buy something else. In fact, it's very popular, or has been very popular, with the Japanese yen over the years. The Japanese yen, because of what bond rates have been and everything else, and the cost to borrow the yen, significantly cheaper than the return you can get on other assets. So there was this Japanese yen carry trade, and it still exists today, albeit not to the same degree, but where investors would go borrow the Japanese yen, right? They go borrow yen, and then they'd have to pay a borrowing cost, right? An interest rate on that. Let's just say 1% for the sake of argument. So it's costing them 1% to borrow money. Well, they can go put it into U.S. equities and get a 5% return or a 10% return. And so it was very, very popular, and it's one of the big reasons why we saw the unwind back in 2007. But, where investors are going out, they're borrowing yen and using that to leverage up and buy stock. And so pretty much you could look at the yen and go, well, yen's up, so market's down. Yen's down, so market's up. And it pretty much existed that way because of the carry trade. Now, that's come off to a certain degree, here over time, but, it still exists. But when you say what's the big deal about Turkey and the lira, well, it's the carry trade, and Turkey has Turkey has had a little bit of turmoil over the years, especially from a political standpoint. There are elections here this weekend, so adding to some of that angst there, and so we have that situation that kind of creates a little more angst in the market. Is it something that's going to cause global markets to be roiled and fold and drop huge? No, it's not. In and of itself, it's just not a big enough deal, to affect the global economy. As a little bit of, increased uncertainty in a market that's already a little bit rattled, is it enough to create some downward momentum? Sure. It is, but, investors aren't going to go and price things into ridiculous levels because of Turkey, right? It just adds a little bit to some of the uncertainty that's out there. So, we saw that last night, in S&P futures, where, futures were trading on higher. Let me pull it up here. Futures were trading on higher. They had just kind of been drifting on up, and they were up about 10 points here around midnight my time. Then Europe opens up, and then we see this drop right here in S&P futures. And, to put this into context, this is what, a 12-point drop, right? It's a 12-point drop. It's not exactly huge, right? We're not talking about this massive, type of move. And then, overall futures kind of recover that. And then the market opens here this morning, and what do we see? We saw an initial pop higher. And when we've seen that, what's been the ultimate result? Drop down. So we drop, and then we pop, and then we drop, and we're still dropping. But, one of the things about a bearish market, you've heard me say this before, 10-point moves are common. And when we look this morning and we see this kind of 10-point rally off the lows, that's not a bullish move. That's a bear market style move, and we've seen that out there in the market here today. You can also see the reaction high, reaction low, that was built here this morning. We had the reaction high early, the reaction low just a little bit later, and you can see what's happened once the reaction low is broken. boom, big drop, big drop. I mean, 12 points, right? If we put this into context, this is not the biggest move in the world that's going on out there. But here's the 5-minute chart where you can see the drop that we saw on Friday, right? And you compare today's drop to Friday's drop, it's not even close. But we've had the retracements. We talked about these retracements yesterday, and now we're starting to see some of the downdraft from it. I'd be surprised if the lows from last week are not retested. In fact, I'd be very surprised if those weren't retested. But we'll see kind of how it all plays out. Small caps are lagging here a little bit on the day. But you'll see they're not, down to their lows from Friday, right? So, we're not exactly talking about, that level being achieved or a big lag here on the week. Where we have seen some of the lag here this morning is actually in tech. You take Apple out of it, and tech is a lot worse than what it looks like here this morning. But Adobe down $4, Google down 14, Microsoft down $1.70. We're seeing some pretty hefty selling come into the tech space overall. Now, Apple got another upgrade here this morning. It's been upgrade central here for Apple, but yesterday Apple reversed. It was up here at 193 and went all the way down to 184. There's been a lot of news on Apple, announcements on Apple, what's going on in the products, and that's all over the news. You can see all that, but that's kind of been the reaction here. And then getting a little bit of analyst help here this morning. And what I believe Piper Jaffray saying, $202 price target, but that, Apple wouldn't have a problem, getting into the upper 200s. And, he's right. Apple fundamentally, is it going to struggle to get in the upper 200s if the market is strong? No, it's not. It's not, that's not a crazy level for it. But, if the market is weaker, it's pie in the sky. It's not, the investors aren't going to price it out that way. We're seeing bonds continue to lift higher here. We're seeing a little snapback in the volatility index. We're seeing gold and oil both down slightly, so not a huge move here with those. And then, it's just, you can even see my board here, just kind of a mixed bag. This isn't one of those cells where everything is red. Apple, Baba, Tesla, AT&T, FedEx, Halliburton, all kind of trading in the green here a little bit this morning. So we still have, and one of the things the bulls can kind of still cling to is that there's still some differentiation out there. It's not a, hey, sell everything, panic out type of scenario here in the market. Now, we are seeing that a little bit in tech here today as, we're seeing we're seeing some of the chip makers, getting hit, the AMDs of the world, which is, finally erasing that kind of ridiculous rally we saw last week, that huge short squeeze. And then, Micron, which has completely erased its earnings rally, reports earnings. And we talked about when they did. They report earnings. They talk about slowing production on their biggest growth product, NAND flash, and the stock just surges. It just, just pretty insane. And the reaction since has been, the one that, is a little more logical. We did see Western Digital upgraded this morning, and you can see the stock's not really reacting to the upgrade. But basically, analysts came out and said, hey, the slowdown in NAND flash, memory manufacturing for Micron is going to benefit Western Digital, but it's obviously not benefiting Western Digital here, so far this morning. We see Caterpillar weakening, here on the day, just a little bit, down about 0.5%. So, it's one where we're not seeing a lot of huge chart changes. Things that have kind of been in bearish modes are still in bearish modes. Things in bullish modes, they're still in bullish modes for the most part. It's not, when I went through some of my scans and some of my watch list here this morning, it wasn't like we were seeing major change and where we go, well, okay, this stock has been really bullish and now it's bearish. There's not a ton of that out there. a little bit of that happening in tech, but let's face it, Google broke the 7 earlier or on Friday, right? Microsoft, it broke the 7 on Friday. Now getting a continuation to, that Friday sell here overall. So, that's kind of, that's what we're seeing out there. Emerging markets, the EEM, down about 1%, pushing into a new short-term low. China holding up here just a little bit better this morning. But it's the same chart. It's the same flow. The EWZ, Brazil, pushing into a new short-term low. So it's, it's definitely a bear's kind of open here this morning. And if you look even at the sectoral breakdown of where things are, healthcare, technology, these have been two of the hedge fund favorites, right? These have been the two areas where hedge funds have been in and been in big, been in chasing, and they're the big laggards here on the day. And it tells you the hedge funds are starting to have to say, all right, you know what, off we go. Industrials and consumer discretionary still, holding up pretty darn well. Financials holding up pretty well here, on the day. So it's not a completely bearish stack where we'd see, consumer staples on top and utilities on top. But, it's definitely not a bullish stack, when it comes down to it. So that's kind of the open that we're seeing, here in the market. Now, as far as just some risk-reward type of plays that are out there, you could take a look at different things. And, I talked about Johnson & Johnson yesterday, and that I'd be looking at it today and looking for an opportunity to get in. Assuming J&J closed near its highs, which, it did, and that it has kind of an inside day today. Now, J&J did something this morning. This morning, it opened up and it broke yesterday's high. What does that mean? Well, that means it's no longer an inside day. It's no longer an inside day. Inside day, all the action happens within the candle of the prior day. That breakout beyond yesterday's candle, yes, it was brief, and yes, it wasn't for very long, but it creates a different dynamic. It creates kind of a failed rally. And if it were just right here, right at the beginning, all right, fine. But this happened as the first half hour or first hour of the market went on. We saw this push into a new short-term high, and then that gets sold pretty aggressively. So it's not just that simple inside day where you go, okay, this is a nice little buy opportunity. This is almost one of those where you go, okay, was yesterday just kind of a flash in the pan, and now it get reversed down, and if it breaks back below the 7-hour, down we go. And that's really kind of what it looks like, more than a, hey, you know what, buy this little dip here today. Now, that could change by the end of the day, but this is one I was looking for upside, but I do not like the price on it, action on it at all this morning. I would have rather seen it gap down 50 cents and be down $1 right now, and then close where, it's down 50 cents, than to be a buyer of it here with it only down 15 cents, given what the early price action in the stock has been. So, that one kind of, goes away on my risk reward. I still look at CAD as far as phenomenal risk reward here with it, and, still one to break down in the 124 to 126 area. Now, for the challenge, I can't really go and trade it. I can't really go and trade it here. I guess I could take the few $100 I have on Home Depot, combine it with the few $100 I have in cash, and go, put some sort of play on it. But as I was looking at things yesterday, and I priced out CAT and Halliburton and FedEx and Microsoft, and, went and priced all these out, I just kind of said to myself, all right, I don't want to get caught with another upgrade. I've had enough of that right now. I just... the last thing I want to do is go short Microsoft, wake up and, market's down big, Microsoft's upgraded, and, have to deal with that again. I've had my fill for the month of, being in that 3 trades where I've gotten in the trade and analyst action has been the complete opposite of my trade. The odds of that happening are very, very slim. And so I just said, you know what, I'm taking that away for now, for the moment. And I went with EEM and, decided to, just play an index and say, you know what, market vibes bearish. Let's just take in and see if we can take advantage of that. This is not something that this is not the move I'm looking for. This is not the move that I go, oh, okay, this is the trade I was looking for. I'm looking for something significantly deeper. Now, 41.5, okay, that's 200-day moving average. I may have to pay attention there. We might find a little support there, but I think there's potential of full breakdown into the $40 area. Here with that, and so that's what I'm kind of looking for. So while I like the setup on CAT, I kind of have some CAT exposure with the EEM already, and whatnot there. I do like FedEx a lot. Now it rallied into the close nicely. We're seeing it kind of holding up okay here today. But this is one where I think if we're talking about FedEx breaking about the 173 area, it's go, go, go. Short and go. And I have 173 circled on my personal notes, here for FedEx. And if it were to do that, I'd be looking for an opportunity to jump on in. This morning, we saw Southwest come out and release some data on how the Boeing plane has affected them, and kind of lowered some of their guidance. This is kind of the first step for a company like Southwest to bottom, or for an airline to bottom. And you think about the airlines today, what happened? Yeah, the Southwest, they downgraded all their numbers, but they added certainty. It was no longer, I wonder how much this is going to affect them. Oh, now we know how much it'll affect. It's a short-term thing. Go. Right. So, some certainty has been created or added here to the airlines, and that's generally the first step of a bottoming process. You generally don't get a bottom on that type of news, but you can start to look at this level for where bottoming might start to take place. And so I think today is a very important day for the airlines. We're going to hear from other airlines coming out with the same type of information. We have Boeing going to Washington here today. So that drama is going to continue. But we talked about Boeing, when this happened, the path of least resistance for the next several weeks is going to be lower, just kind of this kind of drift down lower consolidation type of thing, before it's really able to get anything more than a sizable bounce. We see that, continuing to play out here with that. I think overall, whether you're bullish or bearish, one of the things you have to kind of watch for today, do some of the top performers start breaking down? Do some of the top performers just really start to break down? A Microsoft, for instance. We saw a pretty high volume kind of runaway freight train on Microsoft into a new short-term high. Is this the bulls exhausting themselves? Is this the bulls saying, all right, we're in, and now there's just no buyer, there are no buyers really left to be had? I think that argument can be made for a lot of these stocks that just kind of made these monster runs. And we're not going to see them all just kind of pull back at once. We'll see them start to break down one at a time. But we're starting to see some of it. It's starting to come in, here into the market where some of these top stocks are starting to break on down, not getting, the buy action that we typically see here with them. Pepsi, you talk about a blow off the top type of move. Definitely in play here, with Pepsi, and a high volume reversal, happening at least so far here today. You look at a Visa, and this has just been an absolute top stock, but wasn't able to push into a new high on Thursday. And then, big bad bearish engulfing's trying to set up here today after a monster volume move yesterday. If we start talking about these stocks breaking down, and Visa has a little further to go down to talk about it being a breakdown. But if those top stocks start to clear down, that's when we're going to see fund managers have to sell. They're going to have to start to trim in a big way. Today, it's hedge fund selling, and when and I don't have data to support that 100%. That data won't be coming out till later, but when we look at the sectors and what's on the move and how things are moving, this is hedge fund selling. This isn't big fund manager selling just yet. But if these top stocks start to break down, then we're talking about big fund manager selling overall. And ultimately, where I stand with the market, and my overall view on the market, and the fact that I think this market has a lot of downside, to come in it, but it's not one where I look at it today and go, well, just sell everything today and you're golden. No, there's still be bounces and things like that that exist, but if we look and we see Apple go red here today and hold red here today, this is one where the market could get very ugly in the days ahead, and especially as we see the internals continue to break down, as we see global stocks continue to break into new short-term lows. Just some of those ugly clouds are continuing to build. We're not talking about an oversold condition. We're not talking about the metrics being strongly oversold or anywhere near it. We're talking about kind of the initial breakdown, starting to happen. And I know the metrics turned bearish. We got kind of a bearish breakdown in some of the metrics a few weeks ago, and the market bought it up. We saw the S&P. We saw the metrics break down right here, and the market bought it on up. And so, this breakdown we see on Friday, right? When the last breakdown didn't pan out, the first tendency is to go, well, I don't know if this one will pan out. But the reality is, the majority of the time it does. We have a breakdown happening, and actually a stronger breakdown in the metrics happening right now than what we saw right back here. When we've seen the up days, right? We saw yesterday, we saw an up day in the market, and the internals actually continue to drift lower. When we see that, generally there's further downside to come. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.